Welcome back. Now, either insurance companies will need to find someone to insure them, or they'll have to increase premiums given the spate of misfortunes in the country. If we're not facing natural disasters, we found ourselves being victims of the dark. Insurance companies now have a difficult task in paying out thousands of claims at the back of this. And let's speak to Associate Director of Financial Services at KPMG Ben Vosloo, who joins us now just to give us a little more details and a little further. Thank you so much, Ben, for your time here on eNCA, and good afternoon. Now, obviously, you know, in your report, you talk about global reinsurers who are also facing the tough task. Just explain to us what's the difference between an insurer and a reinsurer, just firstly.
Yeah, an insurance company, Masego, is an entity that insures policyholders, you know, where risk is transferred from policyholders to insurance company. But as you were saying, insurance companies also need to mitigate their risk and manage their risk. And in order to do so, they enter into these reinsurance arrangements, which is effectively meaning that these risks that insurance companies take on are effectively distributed and shared amongst reinsurers worldwide.
So it looks like a domino effect, right? Because then the reinsurers also are starting to think, oh, I'm not going to have the money to be able to keep bailing out, for lack of a better term, this particular insurance company. And the insurance company, in turn, will not be able to pay out any claims. And meanwhile, as a client, you're paying your premiums every single month. So are we, especially the blackouts in terms of load shedding, Ben, is that, you know, putting insurance companies at risk of actually just running out of business completely?
Yeah, Masego, look, we've seen insurers in South Africa report that they've experienced increased claims due to power surges and losses and damage to home appliances and to computer equipment and the likes. I think what's important to note is from a South African insurance industry perspective, we have quite a strong solvency regulatory regime, which requires these insurers to hold significant amount of capital in order to withstand or with these types of significant losses. These losses in particular, or these capital requirements in particular, are calibrated when a 1 in 200 year event happens. A 1 in 200 year event is a massive event. So very well capitalized. And what we've seen, you know, during the times of COVID-19, where we saw increased losses in terms of business interruption on the non-life insurance side, and on the life insurance side, mortality losses, we've seen how the insurance industry was able to withstand these significant type of losses. But you're quite right, in terms of risk and premiums, you know, as risks increases, it is expected that prices will harden and increase. And therefore, you know, even from a reinsurance perspective, we are expected to see reinsurance premiums, you know, for insurance companies to insure themselves also to increase.
So I guess my next question then becomes redundant, because I was going to ask you how insurance companies should adapt to our new reality of load shedding. I mean, even the president on Saturday saying that it's going to stay with us for a while, today in his letter saying that it's our reality. So this is our new reality. And I was going to ask you how they should adapt, but you've already said that the only way is for them to actually increase the premium?
Yeah, correct. And there's other forms of risk mitigation. So it's important that insurance industry work with government, you know, in order to apply these risk mitigating techniques to not only mitigate their risk, but also from a policyholder perspective. I can maybe just add from a load shedding perspective, you know, we are expecting to see increased communication and education from the insurance industry with their customers or with their policyholders. To educate them, you know, for when using alternative sources of energy, generators, inverters, solar system, you know, that these policyholders at least inform the insurance company, and then making sure that these devices are installed by accredited institutions, which I think is important from an insurance industry risk perspective.
Mm-hmm. And I mean, how much money are we talking about all in all, you know, in terms of the fact that, for instance, I see that in your report, Santam alone had to pay around 566 million rand for the KZN floods alone. And now there's also obviously the added fact that they have had people claiming for their house appliances because of load shedding. Climate change also had a lot to do with it. And then there was COVID-19 and the fact that people were claiming probably, you know, because of the fact that they don't have jobs anymore.
Yeah, Masega, these losses are significant, as you can imagine. There's reports that says that, you know, the first sort of experience or the first sort of the reality of climate change we've seen earlier this year, like you said, with the KZN claims, which was a significant loss to the insurance industry. What was important from that loss perspective is the reports that the policyholders was significantly uninsured, and I think that's also a critical thing from an insurance industry perspective around that education and communication of being adequately insured to prevent these underinsurance scenarios. But all in all, to come back to the South African solvency regulatory regime, which requires insurance companies to hold significant capital to withstand, these large events. And I think the insurance industry has done well thus far in order to withstand these losses.
And just lastly, Mr. Vosloo, I mean, I imagine that there are some people, our pockets are getting tighter, money is getting more and more, the value is becoming more smaller almost every single month. Last week, the Reserve Bank also announcing the new interest rate. Now, people are going to start trying to save some money, right? And some of them might start thinking, well, if insurance is going to take up my premium so drastically, then I might as well not be insured and maybe just keep, for instance, your life insurance or retirement annuity. What would be your advice, at least, to the policyholders themselves who are probably thinking, maybe I should just let this go?
Yeah, Masega, I mean, the debate around the necessity of insurance, of having insurance, is as long as the financial product itself, I guess. But I think, considering what we've experienced over the last 2 years and the losses that we've seen, ranging from COVID-19, the looting, significant weather-related losses, wildfires, and globally we've seen, these catastrophe losses, natural catastrophe losses, increasing in terms of severity and frequency. I think the importance of insurance has never been as important, I guess. That would be my sort of conclusion, and it's something that we almost cannot go without.
Yeah, well, I definitely did see that when I experienced something with my vehicle. I was very glad to have insurance at that time because it gave me peace of mind. But in all honesty, these days, people are going to start letting go of very important things such as insurance to try and still be able to put food on the table. Thank you so much for your time. That was Ben Vosloo from KPMG. Now,